Good morning, this is Jack from Charting Markets, and this is the Bigger Picture webinar for the morning of Wednesday, the 10th of December. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to trend charts. I'm not here to issue trading signals. This is a video for paying subscribers at CTM The Bigger Picture Substack.com, and it's published on YouTube after a delay of a week. All right, great. Let's have a look. Well, welcome to FOMC Day. When I looked yesterday, there was a 95% chance that there's going to be a rate cut today, although honestly, I'm not entirely sure what basis that rate cut would be made. Certainly not because inflation is going down, but I think mainly because the job market is in kind of a mess. So we'll see how that goes today. But in the meantime, I would say that I've been talking about the on the pre-market videos. I've been talking about the negative divergence here, and I've been watching possible topping patterns form. They're not big, but they are there. And this is a possible head and shoulders forming on ES. This is a less nice possible small head and shoulders forming on NQ. On RTY, this has been probably the strongest this week. This went back, we had a double top breakdown here, and that rejected, and we've got another possible little double top here as a result. We've still got a weak 60-minute sell signal here. The other ones have reached the possible near miss target. NQ has reached that this week. ESTX has reached that this week as well. YM, we've got a little double top which broke down at the same time as the IWM, but obviously has been heading down towards the target. DAX, no particularly obvious pattern here so far, and ESTX, we've got a little double top that's broken down with a target in the 56.73 area. All right, let's have a look at the bigger picture charts. Okay, I am wondering about a possible backtest of the daily middle band on ES. I've got that at 67.80, so that would involve going down another 68 points potentially. We did have a possible RSI 5 sell signal brewing here, but we lost the divergence there and we lost it on SPX. We never had any on Qs. Although if we retested the high from here, we could get a small one. Dia, we had one, and the divergence survived, and that actually fixed yesterday. And we got one brewing on IWM, but obviously that's been the strongest this week, so that hasn't fixed yet. In terms of the smaller picture, negative divergences, we've got an RSI 14 sell signal that is fixed on the hourly chart on SPX, and that hasn't made target yet, and I'm thinking it might do that today if the reaction to whatever the Fed is announcing is negative. Qs, we've got an early RSI 14 sell signal fixed as well. Dia, we've got an RSI 14 sell signal fixed as well. These tend to be good signals, and I am wondering about those maybe making target today. And IWM, we've got a weak RSI 14 sell signal fixed as well. So we've still got quite a lot of hourly negative divergence that hasn't been resolved yet. In terms of possible topping patterns, got very much a potential little level top here on IWM. I would note that I've still got targets basically up at retest of the all-time highs on all of these, but on IWM, we've actually reached that target. So we have a potential large double top here, although I'm still expecting the others to make target. But I would just note that this is the first to make a new all-time high. In terms of the others, SPX still significantly short, but I'm leaning towards seeing it. I'm thinking if we do a retracement here, this is likely not a big high of some kind. I'd still be expecting to see that afterwards. On Qs, hasn't quite made it quite as far, but we've got we're certainly within range of a high retest, and Dia the same. I am thinking we might see back tests of the daily middle bands today. And I have to say, so far, this has been relatively weak. I'm planning to do a post on the rising wedges here and where I'm thinking the resistance levels are, but I'm thinking we might just do high retests at the moment. December is going by without making any. I mean, we had obviously a nice, strong move up off the low, but since then, this has been pretty weak stuff. All right, great. Let's have a look at DAX and Nikkei, both of which are looking pretty good to retest the highs potentially themselves. We've still got the head and shoulders that we've got on DAX here hasn't actually failed yet, and won't fail until we get over 24.4K. But if it can do that, then we're we're back over the daily middle band, and this is still looking pretty good for a possible retest of the high. And Nikkei back over the daily middle band. We never actually had a head and shoulders breakdown here. And I'm no longer regarding this as forming. So the obvious target here would be a retest of the high here as well. So we shall see. No RSI 5 sell signals fixed or brewing on either of those. All right, let's have a look at DX. Now DX, we've got, obviously, we're in a big inflection point. We've got a double top which has broken down here, and this is forming what could be a bear flag, setting up a retest of this low. Looking at the other currencies, this looks like a big bear flag on EURUSD, and that has been forming a little bull flag, and I am leaning towards seeing a retest of this high and then a fail downwards. So we'll see how that goes. GBP USD looks like a little bull flag forming here as well. USD JPY, we had a big bull flag. Now, of course, this is positively correlated with US dollar. So this is, while the dollar's been rallying, we've actually done more impressive work to the upside on USD JPY. This looks like a flag. It could expand into a larger flag, but until it does, the obvious next target is a retest of this of the November high up here just below 158. USD CAD is rallying a bit. This is basically, this is positively correlated with the dollar as well. So what we're seeing is weakness in the dollar against the Canadian dollar. So, but this is showing some signs of rallying. 60-minute buy signal fix. Could we see a retest of this low and then a rise? Yes, we could. Australian dollar, possible little level top. NZ, possible little level top as well, but they're only small. We will see how that goes. Let's have a look at the bigger picture charts. And on the US dollar, this is the big inflection point here. This is the double bottom, which is breaking up here with a target in the 104.10 to 15 area, and the possible bear flag and little level top here, which is trying to break down. That, because this is an inflection point where really we either head up to 104 or we reject back down to 96.22. Keeping an open mind on the bigger picture, I'm still liking the upside. This is a lovely bull flag here, matched with big bear flags on EURUSD and GBP USD, and I'm leaving. Well, I tend to favour the pattern until demonstrated otherwise, but we will see how that goes. And I like the upside, although I would say the administration is not doing anything really to inspire confidence in the dollar here. So we'll see how that goes. I would note also that we're slightly below the 200 DMA. That's a pretty key level here, actually. We've been back over it for a while. We're trying to break back below it and are currently below it. And if we can do that, then that will make it a lot easier to get back into the lows. Overall, I'm keeping an open mind here. We will see how that goes. So yeah, 200 DMA was broken up back over here. We're broken back below it. 50 DMA, we're trying to convert back into resistance. We will see. But I'm keeping a fairly open mind here because we've got competing issues here. The pattern setup favors the bulls. Really, the fundamentals, well, looking at the administration, they're not really doing anything to inspire confidence in the dollar. And with the Fed chair's term ending in May and the appointment of a grinning sycophant as the new Fed chair, this is going to be the first time since the 70s we've had a Fed chair who isn't really even pretending to be independent. And last time, well, it didn't go well. All right, looking at USD JPY, I'm still wondering about a possible retest of this high here at 162, whatever happens. No current divergence, but we would get some on a retest of 157.89. Looking at USD CAD, we've been trading in a range here for 10 years now, pretty much, since 2014, so over 10 years. We've been trading in this range here. This could be a double top, although it looks more like a triple top, but really this is a range trade. I would say, just in terms of probably the obvious way to read this would be as a triangle or as a rectangle. That has at least a bullish lean to it. And given that this is USD CAD, that's positively correlated with the dollar, then that potentially is actually bullish for the dollar. No divergence on the daily chart here. We did have a pretty nice looking rising channel which has broken down, but we've already retraced about half of it. Looking at Australian dollar. We've got looks like a potential level bottom here, but it's not really, because we haven't retested this low here. The obvious thing to do at this point really would be to go and retest this low here at 55.10, and if that was the case, well, that would be consistent with the dollar going up as well. No divergence on the daily chart. On NZ, we've been in this triangle since 2020. And the next obvious target within the triangle, I think, would be this triangle support, which would be in the 54 and 90 area. Right, on the NZ chart, on the daily chart, not really any divergence either way. Again, there's a big low here that would there's an argument for retesting, and we may well see that if we see a break up in the dollar, which on pattern terms I'm still leaning towards. All right, great. Let's have a look at bonds and ZB. ZB, we've got a a breakdown here. Now, this is actually quite a significant breakdown. I've noticed this note here is that a large head and shoulders has broken down with a target in the 112.04 area, and I'll just show you that quickly on the daily chart. So let's go. That is this head and shoulders here, and it's nice. It really is nice. We had a double bottom that fell up here. We came back into the lows, and this is a very nice looking head and shoulders which has been forming here since September and is broken down now with the target in the 112.04 area. I think that's got a shot, and obviously with FOMC today, that is something I'm wondering about. Now, that would be something I've mentioned before, and I'm going to be writing another post about this soon, but something I've mentioned about this before, and I was mentioning a year ago, is that when the Fed lowers interest rates, it doesn't necessarily mean that in practical terms interest rates actually go down. In fact, in the recent ones, they haven't gone down in the last couple of years. And as this is more about, the dollar is more about the perceived, yields are more about the perceived risk of dollar debt. Obviously, the US government's running huge structural deficits and is doing absolutely nothing to try and have a plan to ever repay some of this debt or reduce the debt burden. While that is the case, there will be upward pressure on interest rates. And potentially quite a lot of upward pressure, and I'll be looking at that. But in the short term, do I think this head and shoulders got a chance to make a target? Yes, I do. ZN, that's a big one's broken down here with the target in the 110.17 to 110.12 area, and I think that's got a shot too. If we have a look at the bigger picture charts on these, then this looks like a bull flag, setting up a retest of this high here at 51.53. This would actually, if we see that, the inverse head and shoulders doesn't get us that far. It only gets us to about 50.2. But if we go back to the obvious target at 51.53, then this is actually going back into the biggest high since 51.53 took out this high in 2009. This is this would, if we can get back and make a higher high of 51.53, then that would actually be the highest level in over 16 years. That is significant, and of course I've been drawing this and talking about this as a potential inverse head and shoulders. If there is a significant loss of confidence in the US government's willingness to be sensible about bonds, then what we could see here is what would happen in other countries in that situation, and it regularly happens in other countries, which is that the bond market revolts and you see a big spike in interest rates. The IHS target here would be in the 95 area, and that is big, because this is the 30-year yield, and really all borrowing in the US is really based on the 30-year yield and the 10-year yield. If these go up and spike up, well, that's going to have two big effects. One, the cost of borrowing for everybody in the US will increase. Two, the cost of borrowing for the government in particular will increase a lot. We will see. I've got a similar IHS forming on TNX, and again, I'm watching that. So in terms of the shorter term charts, we've got this little IHS that's broken up on TYX. We've got little IHS which is broken up on TNX, although I would note we've reached the level here where if we could, and we sometimes see this, form an alternate right shoulder here. To the one that's already been established, because that would give us a flat neckline. We've got 42.01, we've got 41.92. That is basically a flat neckline, and we could see another right shoulder form, so an alternative IHS form. That's not being favored by TYX at the moment, but you can definitely see that on TLT as well, where we've got 87.523 and 87.56. So we do have that potential here, but in the meantime, we've got head and shoulder patterns which have broken down on TLT, up on TNX and TYX, and these are suggesting that bonds may be about to go down significantly over the next few weeks. All right, great. Let's have a look at oil. Right, now oil's been, we've got a weak 60-minute buy signal fix. This has been pretty weak the last few days. We've got a double bottom that broke up here and hasn't made target, and I'm still thinking that might make target, but obviously this is not looking particularly enthusiastic to the upside. In terms of HO, we've got a potential little level bottom here, but we've been drifting down slightly and may go down more. RBOB, the obvious target here, having got down as far as it has, is actually a retest of this low here, the November low in about the 1.78 area. There's definitely arguments on the downside for all of these, and on the bigger picture, I've got more arguments for the downside. NG, this is interesting because what we've got here on NG is we had what I was talking about on Sunday as what looks an awful lot like a breakup, and this is looking like a rejection, which is an impressive rejection actually. And this is, hang on, I'm just drawing in this. This is a potential rising megaphone, and this is us breaking through the bottom of the megaphone. Now we do have a bit of positive divergence here. You can see, is that divergence? Yeah, it is, just. But we've got a possible 60-minute buy signal brewing here, and I am wondering if we'll see a bit of a rally. But really, in terms of this is dropped basically over a buck. It's gone from 5.5 to 4.5 in a matter of 3 days, 4 days. Wow. This has been a very impressive rejection, and maybe that will hold. Although I have to say, I'm still wondering if we're going to see a breakup and whether this is just a sharp retracement within that move. But if it keeps rejecting, and we just see a little rally here and then it continues down, then this might be actually a attempted breakout which has failed, and that would. Well, I would definitely be looking for lower prices. Let's have a look at those on the bigger picture. Okay, WTIC. Oil. Well, let's do natural gas first. Natural gas, on the bigger picture, what I was talking about was this old double bottom setup there with the target in the, around the 6 area, which has actually come pretty close to making target. And that is something I was thinking maybe we were on track to continue doing. We will see. But the rejection is suggesting that might not be the case. Do we have an obvious pattern which is forming here? And I've got to say, not particularly obvious, I don't think. Let's have a look at the... you can see here on the daily chart that we've got an RSI 5 sell signal which had already fixed. We lost the RSI 14 sell signal. The RSI 5 sell signal has now reached the possible near miss target. This is the move up from the 2024 low, and this is the obvious rising support trend line which has now broken. Let's have a look at this is the resistance trend line that I was using, which was nice, and this could have just been an overthrow. This is not a bad looking move, actually. This is a significant looking break. The next obvious target, if we're going to see more downside, would be down here in about the 4.23 area. We've got a possible head and shoulder neckline there, but I was thinking that really there was no particular point, there was no particular reason to think that we would go down. And I'm still not seeing a strong one here. But could we start seeing a full breakdown here? Potentially. If we came down here, formed a head and shoulders, and then that could get us back down into, the 3 area. Maybe it might be starting to give all of it back. Does that look particularly obvious on the bigger picture charts? I think I've got to go with not particularly, no. And really, on the weekly chart, if we were going to see a move like that, I'd really like to see probably a retest of the high to set up some nice negative divergence. Do we have an obvious pattern here? Not really. So if it does, actually see a full rejection here, I would be a bit surprised. But and we got pretty close to this double bottom target. I'm still thinking we may resume the upside, but the rejection nonetheless is impressive, and might be a signal that something more is coming. All right, looking at oil. Oil, we've got the same deal, which is that we've got falling wedges here, and we're looking at reversals patterns forming on the daily chart on WTech. I have been saying that I'd quite like to see a back test of this low here at 56.06. I'm still thinking we might see that on heating oil because we've got the same pattern on the bigger picture on all of these. We've got a decent looking IHS, which is already breaking up. We could see a move where that fails and we see a retest of the low. That would set up a double bottom, and that could potentially be quite nice. Looking at gas oil. This looks like a straight up double bottom here at the moment. And have we retested that 1.79 low? Not quite, but we're very, very close. Where was the low yesterday? 1.787. No, that is a full retest. So we've got a nested double bottom here. I'm in two minds about whether this would go, whether any of these oils would go lower. And I would say that the more and more Ukraine keeps knocking out Russian refining capacity, the more that looks ambitious. But we will see how that goes. All right, let's have a look at metals. Okay, GC. Just drifting sideways at the moment. I'm leaning towards this being a bull flag or triangle forming and resuming the uptrend here. I'm expecting to see a retest of the all-time high before too long. SI, we had a possible double top setup forming here just under 60, and we have blown over 60 now. We do have a weak 60-minute sell signal fixed, and we will see how that goes from here. But I wouldn't be surprised to see this just continue to the upside. Palladium, bigger picture, we've got a double bottom trying to break up here. We haven't made a higher high over this high here, which would lean bullish in my view. But we've got a triangle which is broken up with a target with a retest at that. On platinum, bigger picture, we've got a big break up here too. We haven't made it back up to a retest of that high, and that looks like the obvious next target. HG, this is looking rather different and often trades rather differently, although it hasn't been doing that in recent days. But we've got a very nice looking potential head and shoulders forming here, which I'm watching, and we're pretty close to the ideal right shoulder high. I'm wondering if this will break down and give us a move down into about the 5.12, 5.125 to 5.15 area. Basically, a back test of the monthly pivot and a little more. We will see. All right, let's have a look at those on the bigger picture and on gold. No current divergence. We've got this triangle which is broken up, and I'm leaning towards seeing a retest of the high at 4381. Looking at silver. We've got some negative divergence here and possible RSI 5 sell signal brewing on the daily. Could see some retracements here, but really, this is just powering higher, and it could just well continue doing that. Platinum, palladium, bigger picture. We've got with possible IHS forming here, and if we see a sustained break up over 1666, then that could have a target in about the 2500 area. I'm thinking that has a decent shot here. I think precious metals generally are looking pretty strong and could see a lot more upside. And actually, the more irresponsible the US government is, the more likely it is that that precious metals have some way to go. Platinum, broken up from an IHS here, and it's encouraging to see platinum and palladium acting more as stores of value than just industrial metals, which I think is what we're seeing here. We will see how it goes. A little bit of negative divergence here if we see a retest of this high, but really, I think these potentially have the room to break out and go a lot higher. Looking at copper, we've got an RSI 14 sell signal fixed, not delivered a lot so far. We've also got a weak RSI 5 sell signal fixed. I'm thinking we could see some decent downside here, and we do have a nice looking head and shoulders forming. Looking at GDX, still leaning towards seeing a retest of this high here at 8508, and GDXJ, the high equivalent high at 112.45. Short term, no negative divergence. So we'll see. All right, let's have a look at the other commodities. KC. KC is failing to hold the monthly middle band at the moment, and I'm thinking this may well, unless that changes, I'm leaning towards seeing a retest of this low and possibly other retest of this low. Bigger picture, there's a lot of pressure to the downside. We're well above historical norms for where coffee trades. Sugar. Still got a nice looking double bottom target in the 15.43 area. This could be a bull flag forming. Looking at CC, CC, we've got a nice looking what could be a flag, but could be a larger reversal pattern forming with basically the next big target up at a possible IHS neckline in the 6700 area. We've got a possible 60-minute sell signal brewing, watching to see how this develops. CT, possible IHS forming, or we could retest the low and set up a potential level bottom. Quite liking the upside here on the bigger picture. On lumber, nice looking double bottom, hasn't broken up yet. ZW, nice looking double bottom here, might be extending lower, but still thinking that has a shot to the upside. Corn, this looks like a bullish consolidation at the moment. Soy, we've got a head and shoulders which is broken down with a target in the 1058.75 area, and at the moment that's looking pretty good to make that target. We do have a possible weak 60-minute buy signal brewing. On ZL, we've got holding the monthly pivot at the moment. While that continues to hold, there's definitely room on the upside. Live cattle reached a possible IHS neckline, and I'm wondering, 60-minute sell signal is fixed. I'm wondering about a possible right shoulder forming, and then possibly heading higher. Lean hogs, possible double, well, we've got a little double bottom that's broken up here, and that the target is basically big double bottom resistance. Looks like a bull flag forming. I'm leaning towards the upside here. All right, let's have a look at the bigger picture charts on those. And coffee. Coffee, we are, as I said, trading well above historical norms here. We've got a potential level top here. We could go straight down. On the daily charts, we're well below the daily middle band. No current signals apart from RSI 14 sell signal, which fixed a while ago and still hasn't made target yet. Looking at sugar, bigger picture, I'm wondering about a move down to the 905 area. We've had a number of decent looking reversal setups here. None of them have delivered so far, and we've got a promising move here, which may well not deliver anything either anyway. We could just be on the way back to 9, which obviously is a long way below. Cocoa, again, by historical standards, we are still at very rich levels. Wondering about a rally here, but bigger picture, I'm leaning towards the downside. We do have a daily RSI 14 buy signal fixed. We had an RSI 5 one, and that's already made target. Wheat, still leaning towards seeing a retest of this 55502 next, and possibly higher. Corn, nice looking double bottom here already. Could just go straight up. I'm thinking this might be one of the best performers next year. On the daily chart, weak RSI 14 sell signal fixed. Kind of looks like a bull flag forming, but it's kind of bull flag where we could see another low below 42.25 next. Soybeans, we broke up from the bear flag, and we're currently giving some of that back because the Chinese have not been buying what they need to buy. Looking at the daily chart, we had a daily RSI 14 sell signal fixed, and that hasn't reached the possible near miss target yet. Looking at cotton, we've got a nice looking double bottom here, and that could break up, but we've just been showing absolutely no signs of going to the upside. Testing the weekly middle band from the below at the moment, and I'm rooting for that breaking up. Lumber, we've got a double top which is broken down here with a target in the retest this low here at 35250, and as soon as we break below this bear flag support, then that would also have a target in the same area. It hasn't broken down yet. I'm expecting that to break down in the not too distant future. All right, let's have a quick look at crypto, where we saw a bit of a rally yesterday, but I'm still leaning towards this being a bear flag. Bitcoin, we didn't quite make it back to bear flag resistance, and this could be the second high of a double top to take us back into the lows. Looking at Solana, we had a bit of a wild day looking at the short term, but bigger picture, we're still well within the overall bear flag. And Ethereum, we actually made it back to a flag resistance, but it's held there so far, and that just gives us a 3-touch resistance trend line at the moment. This has been the strongest looking of the three. We'll see how that goes, but we're still in bear flag territory. As I was telling someone after they had a bit of a panicked call about the rise yesterday afternoon. Not seeing anything suggesting this isn't a bear flag at the moment. All right, great. In that case, I think that's a wrap. Everyone take care, and I'll catch you guys again on Sunday.